What's going on, ladies and gentlemen? My name is Oliver Pigley, your Clarksville real estate agent. Thank you guys so much for tuning in. A little bit about me. I was here for 4 years now. 3 of those years I was active duty military stationed here at Fort Campbell, Kentucky. And one of those years I was a real estate agent. I still am a real estate agent. So my goal here is to help soldiers and their families build generational wealth through real estate. And this is a good medium of me going out and sharing my experience and hopefully giving you guys good information, and then I could absolutely help you out in that journey, and then that will translate to me being able to buy some more properties as well. So without further ado, let's get into the topic of today's video, and that is the different types of loans and who they are really made for. So we are going to start off with the very first one, and probably the most obvious one here being in Clarksville, right next to the military base, is the VA loan. So the VA loan, that's exactly how I was able to afford my place back in 2020. Whenever I was 22 years old, I bought my first home, and it's been an absolute incredible experience. I used the VA home loan, and the VA home loan is 0% down. If you are a veteran or an active duty member, I think you have to be on orders for at least 90 days to be able to qualify for the VA home loan. So like I said, it is 0% down. There are a couple of different things that you are going to need to have, and that is including a memorandum for your service. So you need to get that from your commander, and that's super easy to do. There's drafts already on the internet for that, and you go and you have your commander sign that draft, and then just submit it to whatever bank you are trying to get that VA home loan from. This is by far the easiest way to obtain a home here in really 2024 and beyond, right? It's 0% down, which is great. No money out of your pocket, and typically the sellers or buyers, if it is a hot market, they will pay for your closing cost. Sometimes not so much. So it really is a flip of the coin depending on if they're going to pay your closing costs or not. They did pay my closing costs back in 2020 when everyone was buying, which is pretty cool. So the next one, loan for people that if you do not qualify for the VA loan, don't worry, you still have a really good loan that you can use, and that is the FHA loan. So it is 3.5% down if you have a credit score, I think above 500. So if you have above a 500 credit score, you have 3.5% down, which is awesome. Don't quote me on that. Make sure that you do your own research before you start to go down that path. So 3.5% down is absolutely incredible. And both for the FHA loan and the VA home loan, this needs to be your primary residence. So you cannot use a VA loan to buy a investment property. So that loan we'll talk about later on in this video, but you cannot use the VA home loan or the FHA loan to buy an investment property. Those will be your primary residence only for at least a year. So especially for the VA home loan, you have to live in the property for at least a year. So do not buy investment properties because mortgage fraud, and you'll probably go to jail. So that's just a heads up to you guys. Do what you do with that, what you want. My personal opinion is I would probably not do mortgage fraud if I were you. So the FHA loan, primary residence only, 3.5% down, and a credit score over 500. You should be able to get that pretty easily, and that will be your primary residence, like I said, for both the FHA loan and the VA home loan. Now let's go to the other loan, the conventional loan. You could buy a investment property or your primary residence using a conventional loan that is at least 20% down. When I was trying to do some other investing and other Airbnb stuff earlier on in my career, it ramped up to 25%, especially if I wanted to build cabins or anything like that. It was quite a bit more expensive to do that because it's more of a risk for the bank. And not many people have $100,000 laying around, right? So obviously that didn't work for me, but it could work for some of you. But the conventional loan is typically 20% down, and you could buy either your primary residence or a investment property. If you are looking for your primary residence, I would absolutely go, and you're not a military member or a veteran, I would absolutely try to go with the FHA loan. Do the FHA loan for sure, because you don't want to spend 20% down. It's kind of a lot of money considering, houses are $200,000, $300,000, $400,000. 20% is quite a bit. So that's just something that I would absolutely think about when going through that kind of process, depending on what your goals are. You could also use the DSCR loan. So the DSCR loan, this is a loan for investors. Is basically a loan that is given to you based on the income that is generated by that piece of property. So for example, this place right here, if I decided to rent this place out, or if I wanted to rent this place out, I could switch the loan to a conventional loan. I won't need a DSCR loan because I already bought it, but say this house was on the market and I was like, you know what, this will be a great property to buy using a loan. A DSCR loan, I could go in, be like, hey look, run the numbers on this piece of property, say I get $200 extra a month for renting this out. Could it happen? Yes, maybe, I don't know. But if I can get $200 extra on this month on this property a month, guess what? They're going to give me that loan because this property does cash flow. Now, if they run the numbers and that property does not cash flow, guess what? You're not going to get the money because they're not going to give you money if they know that deal is going to be upside down. So if they know that the deal is going to profit you some money or it's going to cash flow any sort of money, they're going to give you the deal. However, it is 20% down as well. So just remember that. And that one, those interest rates are higher. So they're 2 to 3% or points higher than regular interest rates, just because that loan is much more risky for the bank, right? So say something happens with your rate, or say something happens with your tenants or whatever. That loan in itself is banking on your tenants paying that loan back. And that's the only purpose for that loan. Like a conventional loan, FHA loan, and a VA loan, those are banking on, hey, you're paying that back, right? But the DSCR loan doesn't even take in consideration how much income you have coming in. You'd be an entrepreneur making $2,000 a month, I don't know, just an example, $2,000 a month, and they're not even gonna look at that. If you buy a $400,000 house, they're only gonna look at, hey, does this cash flow, right? And if it does not cash flow, or if your tenants do not pay for that, then that you are underwater and the bank is underwater as well. That's why the APR is slightly higher when it comes to DSCR loans. So that is something that I would absolutely recommend you taking a look and making sure that you understand that you will be paying a higher premium for that loan just because it is slightly more risky for the bank. So there you have it. Those are the loans. Those are the different types of loans. Of course, there are many subsections to conventional loans, like a fix and flip loan under the conventional loan, which if you want to know more about, I did do a one-on-one with Castle Rock Mortgage. Check that out down below in my videos. It was a couple weeks ago. A really good video about all the different types of loans. He is a mortgage lender. He is a lender here in Clarksville, Tennessee. He's a local guy, and he's really good at what he does. That's why I had him on the channel, to give you guys the most value possible, which is awesome. I also wanted to let you guys know that if you guys want to check out your home evaluation, so I have a free home evaluation, and if you want to buy a home, just give me all the information in one clean spreadsheet. Check out my website down below. It's oliverpagel.com. Super easy, it's my name. homebuyers.com, and that you will see both of those tabs on there. And that is what you click on to do the actual home evaluation, to your home evaluation, and if you want to buy a home. And I could give you a call after that, and then we could set something up, like a Zoom meeting or anything like that, and go on our way, get you a home, and then we're all going to be happy. If you are trying to sell a home, go ahead, click down on that link, oliverpagel.com, and it'll give you a home evaluation, and then I could give you a call. And how the conversation is going to kind of go is we'll talk about what the home evaluation tool says. I'll provide some comps for you, so that's comparables, and then we'll talk about any sort of improvements that you've done. That will absolutely help you guys out in getting a better price for your home. So without further ado, thank you guys so much for tuning in. I really appreciate you guys hanging out with me again. And the channel's been doing well actually for views. So I just want to say thank you guys for everyone that comes back and watches my videos. And without further ado, I'll see you guys in the next video.